I'm going to be showing you how I analyze my trade in this very video, and I'm going to be doing a top-down analysis using GPUSD as a live trade example. But before going to that, if you're seeing me for the very first time, my name is Divine. What I do here is document how I trade and make videos that improve how you approach trading. If you want to see something like this video, subscribe and drop a comment. I'll be right back. One of the very first things that I always do whenever I want to analyze the chart is to do a top-down analysis. And this simply means going to the higher time frame, knowing what price is doing the higher time frame, down to the lower time frame. You're simply going from the top to the lowest time frame to simply execute whatever currency pair you want to execute. In this case here, I'm going to be using GPUSD to show you how I analyze my trade doing a top-down analysis. And the first thing you want to bear in mind is to understand that no matter what the candlestick is telling you, that price is either going to the upside, to the downside, or price is resting. It's your duty to use top-down analysis to understand where price is going to. And the first thing you want to do to understand if price is going to the upside, to the downside, or price is resting is to simply go to the daily time frame and use support and resistance to understand where price wants to go to. And for you to be able to do that, you want to simply zoom in and see price from the bigger picture. That means you want to see what price is doing on the bigger picture and then plot your support and your resistance. In this case here, this is a very valid resistance level. Why? Because it has at least more than 3 valid touches on this particular resistance level. The same thing is applicable for a support level. That here also is a valid support level. Why? Because it has at least 3 or more touches on the particular trend. Now, having understood this particular support and resistance, you want to simply interpret it and then know how you can follow price to where price wants to go to. Now, for us to simply interpret these levels, we would see that at every point price gets to support, price tends to buy. And at every point price gets to resistance, price gets to what? Sell. Now, in this case here, for us to simply understand how we can simply interpret what price is doing at the moment, we want to look at the what? Support level. That at the point here, price was acting as a support. Then it failed the support and was now acting as a resistance. And again, resistance has turned to what? Support. That means on this support level, resistance has turned to what? Support. Now, knowing this particular information, we want to simply use this information to identify key levels. That the point where price got to after price turned support to resistance is simply a key level. And the point where price turned resistance to support is simply a key level. And the current point that price gave us resistance level is also a key level. That means in this particular example, or in this case, we are able to identify 3 key levels on the daily time frame. And what this key level is for is to simply use this key level to understand market structure and how we can join price to where price is heading to. Now, in this case, we want to simply go to the 4 hours time frame and use these key levels to understand the market structure that price is creating. Let me zoom in properly so see the candle very well and be able to identify the market structure. Now, for us to simply identify this market structure, we are simply going to start with this particular one that is here. How the price move from this point to the current point price is. In this case here, we would see that here is simply the swing low, here is the swing high, this is the swing low, this is the swing high, this is the swing low, this is the swing high, right? This is where the swing high is, and here's acting as the swing low. So in this whole market structure, the last swing low and the last swing high is simply at this point acting as the last swing low, and here acting as the recent or the last swing high. Now the reason why I not use here as the last swing high is because price have not confirmed that here is a last swing high. That price can simply tend to continue to the upside, or price can simply tend to retrace back to continue the upside, because price is simply in an uptrend. Now for us to simply understand if price is going to retrace or price is going to continue to upside, we want to simply understand how price behaves from this particular swing low to the current place that price is, by simply identifying the demand zone that was created as price was moved from this low to the current place that price is. In this case here, the obvious demand zone we can see at this point is simply this demand zone that is here, and since that, price has not printed a new demand zone. But because of that, we are simply going to be working with what the recent demand zone, which is simply this particular demand zone that price gave us. We are going to go to the 1 hour time frame and refine this particular demand zone to become a point of interest. Remember, we are doing a top-down analysis, and we began from daily time frame, and currently we are heading to the what 1 hour time frame top-down analysis from the high time frame down to lower time frame to get our entries. I'm going to be showing you those entries in this very video. Now in the 1 hour time frame, our duty is to simply refine this zone to become a point of interest. And how we refine this zone is to simply represent this full zone with a specific candlestick that we can identify on this particular zone. And in this case here, this is simply a valid this is simply a valid candlestick that we can use to refine this zone. Now for us to see how we can continue this uptrend, or for us to know if price is going to continue the upside or price is going to retrace, we want to simply see how price move from this point to the current place price is, and understand the point that will give us a confirmation that price is about to retrace. That if price doesn't take out this particular low, then we are going to assume that price is going to continue to the upside, and that will take us to the what 15 minutes time frame, where we are most likely going to identify advanced market structure. Now our duty right now on the 15 minutes time frame is to simply understand the point that price has to take out for us to confirm a downtrend. In this case here, we want to simply see price take out this particular low that is right here for us to confirm a downtrend, right? That this is a particular point that price will have to take out for us to simply confirm a downtrend. Now in this case, how then do we join price to go to the upside, because price is simply heading to the upside, right? In this case here, we want to simply study how price has moved from this point to the current point price is, and that will simply take us to the what 5 minutes time frame. Remember, we are doing a top-down analysis by moving from the higher time frame down to the lower time frame to identify a point of entry. Now in the 5 minutes time frame, for us to identify our entry, we are looking for what structure, liquidity, and a point of interest. In this case here, the last structure that we can clearly see is simply this low, right? This is the last low we can clearly see, and between this particular low to this high, we want to simply identify a point of interest, we want to simply identify liquidity, and then we want to simply target the next high as our take profits. In this case here is simply giving us a what an equal low liquidity, and here is simply giving us a point of interest, that if we are going to take a trade, that this place is simply going to be a good point that we can likely buy price from, and I'm going to be taking this trade if price open tomorrow being Monday. My entry is going to be at this point here, and my stop loss is going to be below this low here, and my take profit is going to be a 1:5 risk to reward. This is what I'm going to be looking at for this very week, right? I'm going to be looking for a 1 is to 5 risk reward. But this trade has the potential to simply go into the next what key level, which is simply at this point here. My entry is going to be a 1 is to 5 risk reward from the current place of entry.